In this video, I'm going to show you a lot of facts about the top 7 biggest fake trading gurus who made millions by scamming day traders. Let's get started.
Demand zones are areas where institutional demand or large buyers enter the market. We can assume that if the market returns to one of the indecision candles below the strong candles, we'll see a second wave of buying. If you look at what we've seen starting from this point, we see consolidation when there's uncertainty in the market.
You might as well have placed the zone right here. You chose this particular zone because, at the moment, this zone is much more advantageous for you. Although we couldn't see this zone right away. There was no way we could have predicted it. There are absolutely no clear patterns here, no solid confirmations that there will be a reversal or that the market will continue to trend upward here.
There are two different trading strategies based on price movement, which together create one of my favorite entry patterns in the market. We have a bearish market, we have bearish impulses, and then small corrective moves, as we've already discussed. Now, in a bearish market, we see lower lows being formed. But since these are equal highs, since resistance is still here, the stop losses, these buy stop orders, are all here, and the rest of the bearish trend is still intact, it's very likely that this will be a false break out of the structure. Instead of breaking out and continuing the move, we break out just to collect liquidity above the equal highs.
Just a short while ago, in one of his popular videos, JFix shared some details regarding a specific market pattern, after which, for some reason, the market is supposed to experience a significant upward trend. Now he's shown us a very similar pattern. But here, for some reason, it's being said that the market is supposed to go down. And I have a question for JFix. So which is it? Should the market go up or down?
Are we at a resistance level or at a support level? You need to understand that if you do something on the weekly chart, it should be reflected on the daily, 4-hour, 2-hour, or 1-hour chart.
This statement by Alex Gonzalez in this video is extremely incorrect. If we were to assume that on the weekly chart we see the candles trending steadily upward, then when we switch over to the daily chart, those same candles might actually be trending downward, even though there was a big impulsive growth before that. But as you can see, the weekly chart and the daily chart can be significantly different from each other. On the weekly chart, we might see a steady upward trend, while on the daily chart, we might see a noticeable downward decline. That's why the trading strategy where we first analyze the weekly time frame and then move to the daily time frame is the most fundamentally incorrect method of approach. Unfortunately, so far in this video, we haven't seen any strategy, we haven't seen any trades, we haven't seen absolutely anything. But the most interesting thing is that just 3 years ago, Alex Gonzalez declared himself a millionaire. And not just any millionaire, but a millionaire from Forex.
All right, which car? Which car do you want to get? What's better for filming? Do you want to take the MC user in or the Rolls?
What a beautiful shot. Pulled up in a Rolls Royce, got out of the Rolls Royce. Now that is a pretty impressive Forex trader, right?
A few good impulsive trades, not like the usual ones, but they bring me profits of 1 to 3, 1 to 4.
I watched this video almost all the way to the end, but I never actually saw Millionaire's Day. But based on what we saw, Alex Gonzalez always dreamed of a wealthy life, but didn't know how to make it happen. What we call the fair value gap
Is the entry point for a trade. The entry point for a trade. Now, for our stop loss or invalidation point, where we'll lock in a loss if the trade goes against us, what makes this strategy so powerful is the risk to reward ratio. This third candle will close the fair value gap.
My name is John Walker, and I'm giving away $100,000 on my Telegram channel, where every third participant can win $3,000. I'll also tell you about the trading strategy that changed my life and helped me earn over $30,000 a month. I left all the links in the comments below this video. Click here right now.
And we can enter the trade. Now you have a complete strategy, and you've seen how it works with a real example.
Let's take a look at this example now. Here, the price is dropping. The fair value gap is right here. And as we can see, when the price approaches this very zone, it moves upward. Unlike Casper's perfect example, where he showed that the price should go down, here we see the price going up. And in this case, you would have taken a loss. Let's look at another example. Here we see the fair value gap again. As you can see, the price entered this zone. You would have opened your trade. Then the price pulled back a little, pulled back again, but it didn't go any lower. You see how the price shot up sharply, and you would have taken another loss. What Casper showed us only works on a market simulator, but in real trading, none of this works. So why did Casper show us this whole fairy tale? And who is it meant for? Very soon, I'll tell you all about it.
This simple scalping strategy consistently brings me results like this, this, and this. And I'll show you exactly how it works. A price gap is when we see a very energetic candle, and you notice there's a gap between the candle and its wick.
There is actually no fair value gap present in this area. What we call a fair value gap is this kind of empty space. You might have already guessed, Casper's lying to us. But why is he doing this, and what's in it for him? Very soon, you'll find out.
We don't want to trade when the price is in an uncertain range. For example, right now the price is here, right?
If I try to sell right here, I'll have to set my stop loss above this high and to take profit at this low. So you see, this isn't the smartest decision from a risk management perspective.
After all, anyone who has studied even the basics of trading knows that if your risk to reward ratio is 1-to-1, you'll end up losing your entire deposit. You really need to consistently strive to achieve at least a 1-to-3 risk to reward ratio if you actually want to generate any sustainable profits in this market.
And as I mentioned, the take profit is set at a level that's
My name is John Walker, and I'm giving away $100,000 on my Telegram channel, where every third participant can win $3,000. I'll also tell you about the trading strategy that changed my life and helped me earn over $30,000 a month. I left all the links in the comments below this video. Click here right now.
3 times the distance to the stop loss. So we drag this position like this up to a level that's 3 times higher, just like this, until this label appears, showing the risk to reward ratio. That's where we'll lock in our profit. Once again, just to make it easier to understand in this video, let's see what happens next. The price keeps going up like this, right? We keep gradually moving up, and slowly but surely, eventually the price reaches the desired level and hits our take profit. That's it.
So why didn't this specific trader we're watching show the trade on a real chart? If we look over here at the interface, there are fast forward buttons. Before showing us such a beautiful trade on the simulator, he carefully rewound the entire price chart, and he already knew exactly where the price would go. That's exactly why he said, "Here I open a trade, and look what a guru trader I am."
So much for the 4-hour chart. Let's move to the 1 hour. How do you choose which chart to use? It depends on your chosen trading chart. I don't jump from chart to chart or switch time frames looking for...
If you're actually following through with what you just finished explaining to me, then why is it that you are drawing trend lines starting first on the monthly chart, then on the weekly chart, and then finally on the daily chart? Why do you need those lines? Just to draw them?
I showed you how to mark up the chart and how to draw trend lines accurately. Now let's figure out how to use these trend lines in our trading strategy. So right now we're in a short position, expecting the stock price to keep dropping and just bounce off this trend line. The main rule, especially for beginners, is not to risk more than 1 or 2% of your capital.
The problem is that this specific piece of advice often fails to work because people who come to the financial markets are simply not willing to risk just 1%. They'll risk 10 or even 50% on a single individual trade, simply because either they don't have $10,000 or they do have $10,000 but are not willing to spend 8 full hours just to earn a mere $100.
For shorter trades, if you want a quick profit, more confidence, or quick wins, use a take profit order. A good rule is using a support or resistance zone where the price is most likely to reverse.
But why should the market price chart even reach that specific trend line she just drew? She didn't actually provide any solid arguments or supporting facts to back it up, other than simply saying, "I drew the line right here, so the price definitely has to reach it eventually." But in most cases, the price chart will move like this. Let's say you initiated a short position on this asset right here, and you believe the price will drop down at this specific price level. You'll lock in your profit and generate a successful return on your trade. But here's what will happen to you in 90% of cases. The price might not reach that line. start to turn around, and then keep rising, 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 getting stronger and stronger. It doesn't matter if you open a short position here, you'll lose money. If you open a short position here, you'll also lose money. If you open one here, you'll lose your hard-earned money as well. Frank handed over his money, and months after it had completely vanished, TGR kept deceiving him with empty and false promises of getting it back. Fed up with excuses, Frank made things worse by writing to TGR in the family group chat, telling everyone how their son, the successful trader, had lost all the money Frank had invested. Frank's complaint eventually worked, and in 2022, TGR was forced to return all the money Frank had invested in 2021. After such a bad experience, instead of ending his trading career, TGR decided to launch it on TikTok, rebranding himself as a financial genius. In order to grab everyone's attention, he used that same old, highly suspicious MetaTrader screenshot from March 2021, showing a profit of $100,000. In a layer video from July 2025, TGR claimed that when he first became popular, he had already been trading successfully for 18 months. But one of the individuals who participated in TGR's program, who had personally paid out $4,000 for the training, eventually decided to fully expose the scheme and posted a video. According to this participant, the $4,000 program was marketed as an exclusive 30-day coaching course for 30 students. In reality, though, more than 500 people ended up in the group. There was no individual guidance, and TGR only posted 2 messages on the server. The only interaction was a short and limited Q&A session after group lectures, which it seemed that it was actually made up of repurposed material from his free intensive series.
But now, demand is strong enough to overcome this area. And it often happens that the price drops at first, then tests the opposite side again, and that's the last point before the market explodes and the price shoots up sharply. If you use this trading model, you'll have an amazing opportunity to make a big profit.
Or just as much of a chance to take a loss.
I'll show you a few examples of how I use this in real time. So we have a trend that's generally moving upward. We see highs that are reacting to this key level. All right, a candle breaks through this key level, creating a price gap. The price goes up, comes back to this trend level and the price gap. And we see a candle that reacts to this level. Okay, this is where I would start building a position.
The first group of analysts is currently claiming that right now they see a clear uptrend. But there's one huge problem. They observe this uptrend on the 3-minute time frame, but calling this an uptrend on such a short-term time frame is just completely and utterly ridiculous. We will actually see a small breakout. But if, as Craig Pearcock showed, we had entered here, at this point we would have already hit a stop loss, which means we would have taken a loss.
Or you plan to open a trade in a bull market or a bear market. If the market's bullish, you need to find a key level to buy. If the market is bearish, you need to find a key level to sell. Just because the market is bullish, you can't just buy because the market is going up, or sell just because it's going down.
It's like if I started talking right now about how to brush my teeth properly so they shine and sparkle. And at the same time, I won't show you anything. I'll just say, listen, you need to buy a good toothbrush. And you kind of need to brush, a little to the left, a little to the right, maybe move in a clockwise direction, make some motions. But if you don't actually show it, the person will never understand anything in their life. So you keep talking and talking, but you don't show anything. You treated your viewers carelessly by releasing this video.
Today marks exactly 3 years since the last time I bought gold. A bearish pattern is formed on the chart. Very clear 1-hour lows and highs, and so far we haven't broken above them. I'll be waiting for the gold price to test this area again, maybe even grab some liquidity, and then drop down. What I really like is the 2-hour bearish engulfing pattern. I don't trade against the trend.
Alex Gonzalez says that I don't trade against the trend. But if we just draw a single trend line like this, we can already clearly see that the overall trend is moving upward. We can see that the highs and lows are consistently rising. There's absolutely no overall downtrend here at all. The overall trend is always upward for us. All we have right now is just a significant market correction. But opening a position here is a highly risky move right now. And I have a strong feeling that he posted this video for a reason, to show off what a supposedly successful and talented trader he is.
Bingo. That's all I can say. Oh, you can't trade gold. You can't trade this. Hey, I'm telling you, bro, right now, here.
We see a resistance zone, and the price could have reacted in a completely different way. So when opening up a trade right here, the odds were basically exactly 50-50. But for Alex Gonzalez, of course, it's a win because he guessed right. But why is Alex Gonzalez doing all this? Why is he pretending to be a trader? And what does he really want? Taking a look at Alex Gonzalez's website, it is clear to see that he has already trained over 6,000 different students. And this specific training program costs a total of $1,500. That is $1,500 for training, which unfortunately, based on exactly what I just saw and showed you here, leads to only one possible conclusion. All of the luxury cars he shows are actually just rented cars. There is absolutely no real trading knowledge to be found, and Alex Gonzalez's strategies simply do not work in real life. They exist only to attract attention and hype.